the Royal Bank of Canada has unveiled new financing options to assist Canadian homeowners in building, retrofitting, and renovating their properties. These enhancements to RBC's residential construction mortgage program, effective June 28th, are meant to provide opportunities for homeowners to add laneway homes, garden suites, modular units, and other auxiliary dwelling units to their properties. Homeowners can also redevelop their single-family homes into duplexes, triplexes, or multiplexes, depending on municipal zoning regulations. The updated mortgage program aims to meet growing demand for supportive housing options and supplemental rental income among Canadian homeowners, according to a news release. Leah Robinson, Vice President of Home Equity Policy and Regulatory Management at RBC, highlighted the limited access to financing for property redevelopment in the past. Through the Enhanced Residential Construction Mortgage Program, RBC is unlocking a new capability for homeowners to change their property to better suit their needs and help create more housing units for Canadians who need them, Robinson said. The federal government's recent budget announcement, which introduced the Canada Secondary Suite Loan Program, further supports this initiative. Homeowners can access up to $40,000 in low-interest loans to build secondary suites, aligning with municipalities' amendments to zoning bylaws to accommodate such developments. RBC's initiative is seen as a significant step in addressing Canada's housing shortage. The bank's program encourages collaboration between homeowners and home builders. We're excited to support clients who decide to embark on this journey, Robinson added. It's a new frontier for many of them, and ensuring they have the financial support and advice they need to achieve a successful outcome is a key part of our role as a trusted advisor and stakeholder in the future of Canadian communities. According to the news release, the Enhanced Mortgage Program is part of RBC's broader commitment to support homeowners in redeveloping single-family homes into multifamily homes. The initiative follows RBC's acquisition of HSBC Canada and its ongoing efforts to provide additional retail lending support. Homeowners interested in these new financing options are encouraged to consult with RBC mortgage specialists to explore the potential benefits for their specific situations. The Autorité des Marchés Financiers, commonly known as the AMF, has issued a warning to consumers in Quebec regarding fraudulent activities in mortgage brokerage and private loan offerings. The financial regulator has identified multiple websites and individuals operating without proper registration, posing significant risks to consumers. One particular website, drhypothèque.ca, operated by Daniel Cuzano Clavo, has been highlighted by the AMF. Despite not being registered with the AMF, Cuzano Clavo has offered mortgage brokerage services through this site. On April 18, 2024, he was found guilty of illegally conducting a mortgage brokerage business and was fined $193,440. According to the report, he manipulated property prices and falsified personal and financial information to secure loans for clients in financial distress. The AMF has outlined that Cuzano Clavo has a history of similar offenses. On May 20, 2021, he was found guilty of related acts by the Court of Quebec. He also has an extensive criminal record involving financial crimes. The AMF emphasized that drhypothèque.ca should not be confused with Dr. Hypothèque, a legitimate business operated by AMF-registered mortgage broker Felix Di Gennaro. In addition to mortgage brokerage scams, the AMF has also warned against fraudulent websites offering private loans with appealing interest rates. These scams typically involve victims being asked to pay fees for file opening, professional services, or insurance via Interact transfers to personal email addresses. After paying these fees, victims do not receive the promised loan funds. Notable fraudulent websites include paolofolcocourtier.ca, landrycourtier.com, courtiercanada.ca, courtiercanada.com, tremblaysolutions.ca, and siroafinance.ca. Some of these sites misuse the names of legitimate AMF-registered representatives and firms, causing confusion. For instance, Paolo Folco is registered in mortgage brokerage and insurance. Bruno Landry Courtier Assurance Credit Inc. is registered in commercial lines damage insurance. Tremblay Solutions Financières Inc. is registered in insurance of persons. The AMF clarifies that the legitimate representatives and firms do not solicit or advertise through these fraudulent websites. Additionally, none of the names used in the fraudulent websites are registered with the AMF. To protect themselves, consumers are advised by the AMF to verify the registration of individuals or firms by checking the Register of Firms and Individuals Authorized to Practice or by contacting the AMF Information Center. Consumers should also confirm the identity of registered individuals or firms using contact information provided by the AMF and refrain from sharing personal information or transferring money without performing these checks. The AMF is dedicated to maintaining a dynamic, trustworthy financial sector. It regulates activities in insurance, securities and derivatives, financial product and service distribution, deposit institutions, mortgage brokerage, and credit assessment. Home sales in Toronto rose in June 2024 after 4 straight months of decline, following Canada's first interest rate cut in more than 4 years. Prices also saw a marginal increase, according to data released on Thursday by the Toronto Regional Real Estate Board, TRREB. Seasonally adjusted sales rose by 4.2% in June from May, marking a notable uptick in activity. Average home prices increased by 1.8% to 1.13 million Canadian dollars, which is approximately 830,000 United States dollars. This price level is the highest recorded since December 2023. Additionally, new listings were up by 9.3%, indicating more inventory entering the market. The Bank of Canada cut interest rates by 0.25% to 4.75% in early June, signaling a shift in monetary policy that no longer needed to be as restrictive. Money markets are currently seeing a 45% chance of another rate cut this month and are leaning toward a policy rate of 4.25% by the end of the year. TREB did not provide a specific explanation for the increase in June sales. However, the board has previously stated that monthly figures can be volatile when the market is approaching a transition point. On a year-over-year basis, home sales fell by 16.4% in June, while the average selling price was 1.6% lower compared to the same month last year. New listings, on the other hand, jumped by 12.3% annually. Jason Mercer, TRREB's chief market analyst, commented on the current state of the Toronto area housing market. The housing market is currently well supplied. Recent home buyers have benefited from substantial choice and therefore negotiating power on price, Mercer said in a statement. He added that as sales pick up alongside lower borrowing costs, elevated inventory levels will help mitigate against a quick run-up in selling prices. Toronto may be the most lively city in the country, and Ontario, the most populous province, but more and more people are coming to terms with the fact that the region is just not the choice for them due to its prohibitive housing costs. A new survey from the Angus Reid Institute on the topic of interprovincial migration asserts that more people from Ontario are currently contemplating moving somewhere else than people from anywhere else in Canada. The findings, released Wednesday, show that while 28% of Canadians are seriously considering leaving the province they live in because of high rent and real estate prices, a much greater 39% from Ontario specifically are considering relocating. In other provinces, this figure ranged from as little as 15% in Saskatchewan to as much as 36% in British Columbia, with Ontario taking the cake for residents dissatisfied enough with housing expenses to leave. Of those who said yes, most, 45%, said they would settle elsewhere in Canada, while another 15% said they would head to the United States, and another 27% abroad to somewhere other than the United States. 12% were unsure of where they would go. While the question posed to respondents specifically pointed to the cost of keeping a roof over one's head, additional queries revealed that another 8% of Canadians are debating leaving their home province to find a better quality of life. 4% would do so for better access to health care, and another 4% for a cheaper cost of living, not just in the housing department, but overall. Regarding housing, it was renters who are more likely to be inspired to seek cheaper accommodations, though they were only slightly less hopeful about the future of Canada's housing market than homeowners. A total of 51% of renters agreed or strongly agreed with the statement, "I am hopeful that housing affordability will improve over the next few years," compared to 52% of owners with mortgages. Far more owners who had no mortgages to worry about, on the other hand, felt optimistic, 60%. The rapidly rising cost of housing has become a cross-country story in recent years. Last year, the housing market cooled somewhat as higher interest rates took hold, but there is an expectation that it will heat up again. Though the countrywide ramp-up of housing prices has slowed, rent has continued to rise across the country, with some provinces seeing year-over-year average rent increases of more than 17%. It also added that while the proportion of Canadians considering a move away from their province is highest in Ontario, it is also highest in the Greater Toronto Area than in other urban centers. And that wraps up today's episode of the Ontario Mortgage and Real Estate Insights podcast. I hope you found these updates and insights helpful in navigating the ever-changing landscape of the real estate market. If you have any questions or topics you would like us to cover in future episodes, feel free to reach out. Until next time, I am Steve Hamoan, wishing you successful and informed real estate ventures. Stay tuned and stay informed.